The Nasdaq Composite Index fell 4.5% in the first 5 trading days of 2022, mostly due to concerns about rising interest rates, or, in layman's terms, a strong American economy. Especially in light of the approaching new rules, hedge funds have been diversifying their dependence on the U.S. economy. Cathie Wood's flagship fund, ARK Innovation, was also caught up in the midst of the tech sell-off this week, and some experts believe the companies driving her ideas are poised for a strong rally. Why she believes China has enormous potential for electric vehicles. Why didn't she take advantage of the current stock market boom in conventional automobile manufacturers? Keep watching till the very end to find out the answer to these questions. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing is free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. When compared to its competitors, the asset management business ARK Invest has a more aggressive approach. For Cathie Wood, the focus is on disruptive technology, and she takes a conceptual investment strategy in this domain. 6 exchange-traded funds are actively managed by the business, each of which has a different specialty. One thing that all 6 of these individuals have in common is that Wood and her staff are transparent about the facts of their purchasing and selling decisions. Even though many investors are pleased to purchase Apple, Amazon, and Microsoft, Cathie Wood is seeking for the next great innovators in zippy industries like robotics, finance, and space exploration. Investments in this category are high-flying, high-risk, and high-reward in nature, and it's gonna take her fans on a roller coaster journey in 2022. Wood talks from her own personal knowledge and understanding. She's neither a millennial nor a member of Generation Z, for whom the 2000 tech crash is only a horror narrative told by older traders. Having lived through the last big tech meltdown, as well as the notorious Black Monday of 1987, the billionaire is an expert on the subject. She continues to be an outspoken supporter of electric vehicle manufacturers, since she believes they represent the inevitable future of the automotive industry. That is why Wood is okay with electric vehicle firms selling additional shares in order to raise money to finance future technologies such as autonomous tech. Investors may be apprehensive of this technique due to the fact that additional shares may devalue current investors' investments, but she believes this is a short-sighted argument. In the EV space, Wood has favored Tesla due to its first-mover advantage, which has given them an edge of 3 to 4 years over their competitors. When she and her team are looking for the greatest locations to invest their money, one thing the billionaire investor is renowned for is purchasing and selling portions of her stock investments. That is what we're seeing in the new year. The billionaire has trimmed her stake in Tesla by about some margins, but the fund also did purchase another EV stock in 2022. In light of the company's continued sales growth and its stock becoming a better value, investors should not be shocked if she decides to change her strategy once again. Wood believes in Tesla and has set a price objective of $3,000 for the electric car company's shares for 2025. For 2022, Cathie Wood does seem to be focused on growth stocks. The first week of the year saw her make investments in high-growth companies while divesting in an electric vehicle manufacturer, Tesla, document signing platform DocuSign, and social media giant Twitter. Most notably, starting September 2021, Wood has sold a substantial investment in Tesla, with shares worth $140 million sold in the second week of 2022. Is this a sign that EV is no longer a growth stock? That may not be the case, since, although she has sold some of her EV investments, she has also increased her EV investment portfolio by investing in other EV manufacturers. Wood's ARK Fund increased its position in the Chinese electric car manufacturer XPeng after the stock price fell, making it the first EV purchase for ARK funds in 2022. ARK, located in Florida, has also lately increased its holdings in XPeng. Just last week, or more precisely, the second week of 2022, ARK Invest purchased an additional 14,859 shares, valued at $633,439. That purchase marked the money management firm's first purchase of any electric car stock in 2022. This is a follow-up to a massive investment made in mid-December of 2021. As a result of their continued purchases of Chinese EV shares, ARK Invest currently owns around $30 million in XPeng. Wood has been complementing China's deployment of electric vehicles. In recent years, China has risen to become the global leader in the adoption of electric vehicles. It turns out that the year 2021 was no exception. As reported by Wall Street, China's automobile industry reversed a 3-year downward trend last year, thanks largely to high sales of electric cars. In her monthly market analysis, Wood noted that China is a leading indication for EVs and that the used vehicle sector is where she expects losses following a jump in prices. Further down the line on social media, Wood said that China is leading a sign of shift in consumer preference for EVs in response to an earlier tweet from ARK investment analyst Sam Corris, who stated that gas-powered vehicle sales were down around 4%. Those for electric vehicles, on the other hand, increased by almost 145%. The tweet from Wood said that gas-powered automobile sales are expected to suffer in the United States, particularly given that used car inventories, as assessed by Manheim, are around 40% over typical at wholesale and resale. Furthermore, Wood said that she would not be shocked to see a massacre in the used vehicle market, with values plummeting in the following year and continuing into 2023 as prices that have risen as a result of supply chain bottlenecks and a spike in demand begin to decline again. Despite the fact that conventional automakers such as Ford and General Motors have seen a spike in their stock prices after the release of their electric vehicle lineups, Cathie Wood does not believe in the recent stock price increase of traditional automakers. Compared to Tesla's 3% loss, Ford and GM are up 18% and 6% respectively year to date, greatly exceeding the 3% loss seen by Tesla. The pattern from last year has continued, with Ford gaining 137% in value compared to Tesla's gain of 50% the previous year. Still, Wood was not interested in investing in the traditional automaker. The following clips show why Wood was not interested in Ford or GM stock.
And we hope analysts start asking about it. Now, I look at the performance of stocks like GM and Ford. They soared on those electric vehicle announcements. Think about that. That's ridiculous. It's only 2% of their sales. And what if the other 98% or so forth are on their way out as the consumer preference shifts toward electric? They have problems. They have problems because their gross margins, depending on the company, are somewhere between 10 and 20%. Those are very low.
Therefore, firms who have outperformed electric vehicle makers would expect to report losses, which may explain why Wood was not interested in them and instead chose China as the location of their future profits. Chinese success in car electrification, on the other hand, is largely a result of favorable government policies, both at the national and regional levels, that have supported both electric vehicle production and sales. Because of the government's backing, the cost of electric cars has been lowered down to the same level as that of internal combustion engines, putting China on the road to widespread use of the technology. However, as the local electric car industry continues to grow in size and maturity, the government has begun to phase off incentives for new energy vehicles. According to the most recent developments, the government might totally phase off electric vehicle incentives by the end of 2022. Even though Cathie's investment plan took into account these factors, How they would influence them in the future is still unknown, especially because 2021 was a difficult year for ARK funds. Regarding government subsidies, Michael Hyder said that China assisted its top 3 companies and allowed them to prosper in the process. According to Michael, China did the right thing, but the United States is backing the old manufacturer rather than the best. That should wrap things up for today. Keep in mind that subscribing is still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.